Hey everyone, and welcome back. In today's video, we discuss the stock, crypto, and commodities markets and the key levels that you need to be watching over the next 24 hours into the next few weeks. We have some pretty scary news coming out about the US economy. Not only has this rise been incredibly fast, and certain stocks, the biggest stocks in the world, have run almost incomprehensibly fast in terms of their movement, but also on top of that, we have the US 2-year and 10-year about to invert. What does this mean for the US economy moving forward? Stay tuned as we talk about these markets right now. This is sure to be a great one. See you soon. Well, welcome back everybody to our video. This is the video for the 28th of the 3rd, 2022 in terms of the market close. And we'll be talking about crypto, stocks, and of course commodities today. If you like any of those, make sure to subscribe and of course smash that like button. Let's take a look at what happened in the biggest market of the world, the US stock market. And you saw it was a risk-on day. Microsoft, Nvidia, Amazon, and of course Tesla, the split. We'll talk about that more soon. All were going incredibly well. It was a bit of risk off in the energy sector though, that wasn't doing so well. Now in terms of the overall markets, which one was best? Nasdaq was up another 1.93%, S&P 500 up 1%, the Dow and IWM trailing behind. Sector-wise, consumer discretionary was number one, led by Tesla. Then we had software, we had XLK, we had TAN, we had semiconductors. All of the usual suspects were there on a bullish day. Some of the biggest ones for the last 2 months, though, were rotated out of. XME, metals and mining, XLE, and gold. They all had a really bad session. So a lot of the hedges were off and it was risk on across the board. Where do we have the fear greed index right now? Well, it's pretty much neutral. And this means that all of the key levels in terms of things like safe haven demand, stock price breadth, all of those are still pointing towards, I guess you would say, the green side. You'll notice here, if you're ever looking at this oscillator, one of the best things to do, if it ever goes underneath 20, at that point, you're kind of experiencing what you would call max fear, or at least a lot of fear in the markets. This is the point where if you're a long-term investor, often it pays to go and have a look at your charts, look at your system, and see whether there is something that you can find that's offering a better value proposition. Maybe it's something over the long term you want to hold. Let's talk about the big elephant in the room though, and that's got to be the canary, US 10-year, 2-year spreads. So we'll look at this in a live chart very soon, but I want to just bring up, this is predicted really the last 7 recessions. Now it's a canary because it tends to come early. Depending on how long it stays in the inversion, can often say how strong a signal it is towards some form of recession coming in the US economy. It doesn't necessarily happen straight away. It can take 6 months, 12 months, and on average, it seems to be about 12 to 18 months time in the future where you see the actual crash occur. But it's certainly a warning sign in the US economy right now, and it's not good. It could be pointing towards stagflation or even worse, some form of economic bust in the future. But not all hope is lost. Let's talk about the bull and the bear cases and try to come up with what we think could happen over the next 24 hours in today's video. One of the things that's been happening a lot is breadth. So as we know, if market breadth improves, it is a very good sign. And in fact, we saw NDX component stocks go from below negative 90% to above 90% in 3 days. And this leads to usually some strength in the markets over the 1 month, 3 month, and even 6 month, 1 year periods. You'll notice the stats are certainly behind incredible strength. There are still pullbacks, so the average pullbacks are there, but this breadth kind of idea has been one of the big reasons that we've felt strong about this market off the base as of the 16th, 17th of March so far. The big news, as we mentioned, was Tesla. That's 3 stock splits. It's almost pure manipulation at this stage. 3 stock splits, all on some of the largest companies in the US market. What does that do? Well, it tends to lead on to some pretty amazing returns. As we see, stock split companies tend to do better than the broader market overall. We've been discussing this concept of Google, Amazon, and now Tesla for some time. So it brings up some interesting ideas. Now we saw minerals and metals dropping in the last session, but a lot of people say, well, is this the beginning of a commodity super cycle or has it already started? Pretty much, yes, it probably has started. Are commodities expensive? Not based on history. I mean, if you put it on here, relative performance of commodities versus the S&P 500, you would notice that commodities have actually been a horrible investment for a very long time. that's starting to turn and change. So is there more in this trade, or could you see more in this trade? I would say probably over the long term here, let's say the next couple of years, this is one of the places that many people will be hedging, because commodities tend to do well in stagflation, which is a real problem in the US economy right now. Just to keep in mind, it's always good to have these things in the back of our mind and to have them in perspective of where they are now versus where they've been in the past. Remember, relative performance is incredibly important to the technical analysis and just general analysis of markets. So we've talked about midterm years. Our suspicion still is with the data that we have some kind of rally here. Potentially, we then see a decline. Now, I want to bring this chart up again because we don't usually talk about this aspect. Look at the back end of March on all these charts. The back end of March, a little bit of a decline here, second year, new Dem-Pres decline. We have here all midterm years, there's usually a decline at the back of March. And we also have Democratic Pres midterms, a decline at the back of March. And when we start to look at Apple and a few other stocks a little later, this might make sense. Maybe a little decline here followed by some further rally into the April and May period. Why do we think April and May could be there? Well, a lot of people are talking about this, but really the main key is earnings. Do we think the first quarter earnings are going to hold up for the US? Do we think the FOMC meeting, being probably now a 50 basis point ride, is going to be a problem? I would say it could be. Here's the elephant in the room, the US 2-year versus 10-year. That's getting close now to the 1% reading. Not so good. I mean, you start to scroll this out and you go through the monthly and you'll notice that it usually predicts early. And the longer it stays up there, the more scared we can get by inversion. Because, of course, if inversion stays for a long time, it does tend to be really the canary in the coal mine. That is a steep rise, and it's getting steeper and steeper and steeper by the day. Some real problems here on the long term for the US. But the short term, things change a little bit. So let's talk about the VIX. The VIX is back down at the 20. Now, we know one thing about the VIX is that it spikes during fear and it tends to usually drop after fear disappears. Now, we've had this happen a few times. We obviously had it happen over here the 24th of Jan, and then we saw a rally on the 7th of Feb, we hit around 20. We've just hit 20 again. VIX traders will be getting excited again about this level because we know that if the market really closes heavily underneath 20, possibly the fear's gone back into the bull rally. We haven't actually seen a pullback in the last couple of days of trade. The last 10 days for some stocks haven't even gone down. They've just gone up and up and up and up. So is this the point that makes sense? Well, when we look at indices, you'll start to bring together some better ideas. Bond side stuff is actually holding. Now, it's interesting that it's holding versus yields because usually it would drop more. So bond traders are, they're stagnating, I would say, on the market. They have no real opinion in terms of this indicator. Obviously, my current bond indicator, the one I use in some ways, is saying still bullish. So there's not really too many concerns over what the bond traders are necessarily doing. Let's talk about some commodities before we go back into stocks. We'll talk about US oil here. The philosophy that we've had for the last couple of weeks has been the same thing, which is bullish into the 50, into the 78.6, this kind of fib area here. It hit the midpoint being the 61.8. And I expect oil to flounder a bit. So it might go back up even. I doubt it goes past the 78.6 fib at this stage. It just doesn't make sense with the amount of euphoria and drop it had. And it seems like probably the worst is behind us from an oil perspective for now. The TA doesn't really lend itself to too many great trades over the next couple of days. But that being said, I'm sure somebody will be able to find something in this. It's done what we wanted. It got back into the fib. And at this point, I think direction will be a little bit hard to pick. Let's move over to gold. So gold, we've been targeting, can we get back up into this 2000 or at least this 1970? We haven't been able to do it. It actually dropped over the last 24 hours pretty heavily. And gold continues to be a bit of an enigma here. Unfortunately, gold doesn't tend to do very well in high interest rate increases, such as what we're seeing on the 2-year and 10-year at this stage. This is an area where it seems to be consolidating. We got that breakout. It couldn't break to a new high, which is what you want after a candle such as this bullish one. And now it's back down at the key support of 1920. If you like gold, I guess it's the right level. It's not really a super strong trade either way, direction-wise at this point. Let's move over to Tesla. This is where things get really interesting. So Tesla had the stock split, or at least the announcement for the voters to go on. It probably will occur. Now, if you think about Tesla, let's just quickly count these out here today for us. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 10 day candles in a row without one bearish candle. That is unheard of. I don't even know if I can find other times that that's occurred. You can find some 8s and some 7s and things like that, but to find a 10 in a row, wow, that is some serious strength. So we know this particular stock has a gamma squeeze on it. On top of that, you've got the stock split. What a perfect time to really go through. And people that have been trading the bull side will be very happy. Have we hit a key level? I would argue we're right around it. $1,100, $1,100, $1,110. This is a problem area. Why? Because previous resistances have been found at this zone, and we know it's a round number. 1,200, also a big problem area. So the faster this goes up, especially if it gets to these kind of levels, and if it doesn't have any red pullbacks, and especially even here right now, you would have to think that it's overdue for some kind of movement down. Now, would I short Tesla? Probably not. I'm pretty scared of shorting a stock like this. Some of you might say, look, I'm going to do it. Well, that's up to you. I'm sure you've got your systems and your concepts. But this is 10 days in front. It's at a point of resistance leading into the Tuesday open. Let's move over to Apple now. What's this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 10 days. Now, is Apple at a point of resistance? I think you could make a great argument that it is. And Apple actually opened the session down. It was down 1.5%. The rest of the market was flat, but Apple was negative 1.5%. It then rallied to go green for the end of the day. In some ways, you would think that it's overdue for some kind of pullback. Now, that doesn't mean it's going all the way back down to zero or anything like that, back down to 150, but back down to this level here would make some sense. Think about buy zones. Think about where we are currently in this market. A big rally. We're at the end of March, historically a time that's pulled back in the data, and we're at that key resistance. So when we start bringing the indices in, the SPY and the Nasdaq, do they make sense with this? 10 days of rally on Apple at a resistance. What does everyone in the chat think? I mean, a lot of you might say, look, I think all-time highs for Apple in the next couple of weeks. Could be completely correct. But is it due at this resistance potentially for a pullback? That's the question that we're trying to answer and ask in some ways in today's session. It's right around. Everybody's bullish now. Kramer's bullish, as you saw in the meme. You know, he's saying, don't you dare think about selling anything. Is it due? Everyone's euphoric. To show euphoria in its finest form, let's use AMC. AMC is up, what is this, 45% in one day. Congratulations if you're on the AMC, gamma squeeze, short squeeze, whatever you want to call it. It's absolutely flying. It's moved back to the previous supports and resistance areas. So it makes sense, again, just around $30, big psychological, some problems to potentially occur. But wow, did that trade come out of the gates incredibly hard. So did GME. That's back at 189. You can see this incredible increase. Congrats if you're on them, but know what they are. They are squeezes. They will no doubt eventually drop off. Just like last time, that's what happens. Diamond hands, you know, they are forever for some people, but maybe traders probably see it for what it is. Let's have a look here at XLY. And XLY is at a resistance as well. This is consumer discretionary. It's been incredibly strong. We've been watching this. In many ways, XLY tells us that risk is on in the markets. And currently, it's still risk is on. But we're back at the resistance area, the previous resistance that was caused in June into Feb. So we're right back where we expected to be. And that's coming off a tweezer. This is not too bad. I mean, it looks pretty strong and certainly at that key level. We've got the DAX. The DAX is still trapped. So we've got the resistance. Now, we use the DAX as kind of canary because this is a good example of the European market. If the DAX falls through this low, what happens? Well, we probably expect money outflow in Europe, and more importantly, a weakness in the markets across the world. Could be due to the tensions in Russia, the Ukraine, could be due to any news, but that would not be a good sign for the markets around the world. At this moment, the DAX is putting pressure on the upside. Okay, that might be slightly bullish, and indeed, this is still looking better than you would think. IWM still looking bullish at this stage. Another one. If it goes bad, then and the rest of the market isn't going, we'll be paying attention. Currently, it's hovering just below the 209. So a very key zone here for the Russell 2000. But this is where things get really interesting. The Nasdaq. Let's move over. 15,000 on the Nasdaq. Where do we have potential resistance? Well, I would argue probably right around this area. Why? Because we have previous resistance over here. We have a 200 daily SMA. We've run incredibly hard, similar to the Apple and similar to, of course, the Tesla and everything else. And we're appearing at the most logical resistance area. Throughout here, we've been talking shorts would be or should be scared. We're getting to a point where our shorts or is take profits maybe going to start gearing in. People are incredibly bullish. It's switched. Everyone's switched. Now, that doesn't mean you're going to sit there and say, oh, I think new all-time lows or anything. The stats would not detail that. But we saw before the back of March, data-wise, was showing a little bit of weakness. That's where we are right now. Now, are we at a percentage of pullback? So if we take the full run up here all the way, do we have a fib in here? Well, on the S&P, or we do, on the Nasdaq, we've kind of just gone past the 50. So we're between the 50 and the 61.8 in this area. So certainly around that 15,100 presents an interesting case for the intraday trader, for the scalper to be watching and honing in. Now, if it does fall off, where do we expect buyers to come back in? Well, they could come back at all points, but certainly around this daily 20 moving average, previous resistance being support, or this 50, this area here would make a lot of sense. It just would make a lot of sense. It may occur. Let's move over to the SPX. The SPX is pretty similar. Let's take the fib on this one because this is where it gets really interesting. Let's take the fib from the top to the bottom. Now, what did we just get past? A 61.8 fib. What are we approaching? A 4,600. Previous resistance in Feb, it dropped off that point. Do we have a 2050 cross moving forward between the daily moving averages? You would certainly say yes, we do. And does it look like there could be a pullback at this area? Well, again, very big rally, very minimal shorting. Some people are going to say low volume. It's not something that you can use. Low volume is consistent with rallies. If it does fall off, are there levels? Yeah, 4,500 or even around here at, of course, that 4,420. These are levels that make sense, but 4,600 is a huge psychological zone. I would have a hard time guessing that people wouldn't be thinking about taking some profit there. And you'll hear me saying, oh, I'm a little bit negative on the market. It's not particularly because I think it's the best time to short. In fact, shorting into this market's very tough. It's just an idea or concept that you want to think about. And I think when you start to stack the things in the favor of Apple being 10 days in front, that AMC and GME are going crazy, markets can stay irrational longer than you can remain solvent. But these are the types of areas that you want to be targeting and saying, okay, well, do I see the signs of pullbacks here? Do I see the lightning bolt towards the weak side? Do I have some other system that I use towards weakness here? Am I going against the trend? Yes. Do you have to be careful? Absolutely. But you could see that this is a resistance area, and it's certainly a very key one to be watching in the markets. So the S&P 500, that's something that I think a lot of people are going to be watching closely on the Tuesday. They call it turnaround Tuesday. Usually that means the bull side. Is it turnaround Tuesday to the negative side? We'll find out. Very interested to hear your thoughts in the comments down below. Let's see what everybody thinks here. Let's move over to Bitcoin. Now, this is where markets get a little bit different totally again. Now, Bitcoin, we've been more bullish on it since about a week and a bit ago. If you don't believe me, go check out the Twitter. We posted some damning statistics, I would think, about BTC shorts really declining and also our price action improving. Obviously, this turning into a little weird double bottom. But it gets much deeper than that because Bitcoin not only has it broken past our 45,000 resistance, which is really key, but it looks like it's set to kind of move up a little bit more and potentially move towards that 52,000 resistance, the next really key level. Now, will it do it straight away or will it come back down to this level? I'm not sure. We don't know that. But if it comes back down, do we think it'll be met by buyer demand? The guess would be, from a technical perspective, yes, you've got resistance, support, a fib of the pullback. A lot of reasons why there should be some form of buying pressure there should it occur. But it does look very strong. BTC shorts still very low. That's good news for the buyer. Obviously, that means that people are overall bullish. But where it gets really interesting is things like Ethereum versus BTC. So we saw that ratio break out, and everyone can see at this stage that Ethereum is currently holding its own versus BTC in lockstep. Now, it hasn't always done that. When the market falls off, usually Ethereum loses more value than BTC does, as BTC is the S&P 500 and Ethereum, for lack of a better term, is the Nasdaq. If this breaks out of its coil and it breaks past this resistance of 0.072, what do we think could potentially happen? Well, this is a potential for an increase here in Ethereum in relation to BTC. Basically, it's a risk-on kind of thing occurring in the crypto market. Now, where would be the most logical kind of level for it to go to? Probably somewhere around this previous support resistance. What is that? Well, from current price, this would be saying that Ethereum is around 10% undervalued to BTC at this stage. So something I always think about, relative performance. Remember, Ethereum is a serious coin, as are several other coins out there, and this is doing quite well. If we look at the Ethereum chart, that's one of the reasons we were starting to get bullish on the market. It broke our lower trends here. It broke through a descending triangle, which is actually in itself a very bullish style pattern. So it happened, it breached, and now it's having some nice performance. So Ethereum and Bitcoin combined are very powerful techniques, and especially for ratio trades, to figure out where the risk is on and where the money flow is going in these crypto markets. It's something that I think is worth conceptualizing. If you haven't already, please do follow us over on Twitter at FX Evolution. Obviously, come and follow us. Thank you so much for joining us. We're trying to get this thing to 10K, so we're certainly pushing content out there. And in terms of the information coming out over the next couple of days, we've got the JOLTS job openings at 10 a.m. on Tuesday. This is for New York time in the US market. Then we have ADP non-farm employment change, the first number, 8:15 a.m. on Wednesday. Doesn't tend to move the markets too much, but who knows in this weird world. And then we have core PCE price index Thursday, 8:30 a.m., followed up by the non-farms itself. This is the jobs numbers in the US, and ISM manufacturing PMI. So really, it all defines around Friday. There are still a lot of buyers in this market. Kramer's gone bullish. Does that mean that we're about to hit some form of resistance? 10 days up for Apple, 10 days up for Tesla. Tesla, hard to bet against in a stock split, for sure. It's super difficult. But remember, it is unusual to have so many bullish days. That's just statistical fact and the way that we're looking at it. So thanks so much for watching. If you did enjoy the video, please subscribe, smash that like button, and we'll see you in the next one. Bye for now.